Investing can feel like navigating a labyrinth with twists and turns that can lead to great fortune or significant loss. But what if you had a map? Enter Bill Ackman, one of the most renowned hedge fund managers of our time, whose investment strategies have consistently yielded impressive returns. Known for his outspoken and often contrarian views, Ackman has distilled his investment philosophy into 10 key rules that have guided his success. In this video, we will delve into these rules, providing insights and practical advice to help you on your investment journey. Rule 1. Invest in simple, predictable businesses. Ackman advises investing in businesses that are easy to understand and have a predictable future. These are companies with straightforward business models and consistent earnings. For instance, Ackman's investment in Howard Hughes Corporation, a real estate development company, exemplifies this rule. He believed in its long-term potential and clear growth trajectory. I look for simple, predictable, free cash flow generative businesses. Rule 2. Look for high-quality businesses. High-quality businesses often have strong competitive advantages, such as brand recognition, patents, or unique products. These companies tend to perform well even in tough economic times. Ackman's investment in Chipotle Mexican Grill, despite its temporary setbacks, highlights his belief in the long-term strength of high-quality businesses. Rule 3. Buy at a significant discount to intrinsic value. Ackman emphasizes the importance of buying stocks at a significant discount to their intrinsic value, providing a margin of safety. This approach helps protect against potential downside risks. Ackman's investment in Canadian Pacific Railway is a prime example, where he saw an undervalued company with significant upside potential. Rule 4. Seek out companies with excellent management. The quality of a company's management team is crucial. Effective leaders can drive a company's success, making strategic decisions that enhance value. Ackman's admiration for Steve Ells, the founder of Chipotle, is a testament to this rule. He believed Ells' vision and leadership were integral to the company's growth. Rule 5. Focus on long-term value. Ackman is a long-term investor, focusing on companies that will generate value over many years. This approach allows him to ride out short-term market volatility and benefit from the compounding growth of his investments. His long-term stake in automatic data processing, ADP, showcases this strategy. You don't make money buying a stock after it has already been discovered. Rule 6. Use leverage prudently. Leverage can amplify returns, but also increase risk. Ackman advises using leverage prudently, ensuring it is manageable and does not jeopardize financial stability. His cautious use of leverage in Pershing Square Holdings reflects this philosophy, balancing potential gains with risk management. Rule 7. Engage with management and be an activist investor. Ackman is known for his activist investing style, where he actively engages with management to influence strategic decisions. This hands-on approach aims to unlock value for shareholders. His activism at Valent Pharmaceuticals, now Bausch Health Companies, aimed to address corporate governance issues and strategic missteps. Rule 8. Be patient and disciplined. Patience and discipline are key virtues in investing. Ackman advises sticking to your investment thesis and not being swayed by market noise. His steadfast commitment to his investment in Target Corporation, despite initial setbacks, illustrates his disciplined approach. Rule 9. Stay informed and continuously learn. Continuous learning and staying informed about market trends and developments are essential. Ackman is known for his rigorous research and in-depth analysis before making investment decisions. His deep dive into Herbalife's business model, though controversial, exemplifies his thorough research process. Rule 10. Have the courage of your convictions. Investing often requires making bold decisions and having the courage to stand by them, even in the face of opposition. Ackman's conviction in his short position against Herbalife, despite significant criticism, highlights his willingness to stand by his beliefs. The most important thing is to have a long-term perspective. Conclusion. Bill Ackman's 10 rules for investment success offer a comprehensive roadmap for aspiring investors. By focusing on simple, high-quality businesses, buying at a discount, and maintaining a long-term perspective, you can build a resilient and profitable investment portfolio. Embrace continuous learning, engage with management, and have the courage of your convictions. Remember, investing is a journey, and with Ackman's rules as your guide, you can navigate the financial markets with confidence and curiosity. So, are you ready to start your journey to investment success? Dive deeper into these principles, apply them to your own strategy, and watch as your investment acumen grows. Happy investing! Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.